Well, large corporations don't make a move without an extensive capital budgeting process, whether it's for, an acquisition, expanding existing operations, or even any other kind of big capital investment. Management will look very closely at what they expect the return will be over, let's say, a 5 or 10 year period to make sure it's the right decision. Well, with so much uncertainty in Washington these days, it's tough to project anything beyond the next 10 weeks or 10 months, let alone the next 10 years. And that's why I think companies have invested a lot more in stock buybacks in recent years and in dividends. I don't really see reduced buybacks as a red flag. Maybe they've just found, a better use for their cash. It could be expansion plans or research and development as an example. But when a company consistently announces share buybacks and follows through on them, that's a big vote of confidence in the stock. It's a slow growth world out there these days. With the S&P 500 companies, they grew their top line sales just 2% last year in 2013. And that's why I took this buyback index and then ran a second screen for those stocks with the highest organic revenue growth. Now, these are companies that are really firing on all cylinders in this slow sales growth environment. Three of my personal favorites from this list are Marathon Petroleum, which, full disclosure, I actually own in my IRA. It's a leading U.S. refiner that's prospering from the American energy boom. The second would be WellPoint. That's a leading healthcare provider, more of a defensive stock, but that sales are growing about 12% annually. And Kimco Realty, that has a 4.5% dividend yield, which is nice in today's low yield environment. For Money in Markets, this is Mike Bernick. Good investing.